Good afternoon, Scott Redler T3 Live. It is Thursday, so welcome to today's recap. So I figured, jump on a plane, bring my camera crew, and go to the beach. Why not, right? Markets, The S&P's almost 1.5% off the highs. You have the Dow, 1.5% off its highs, if not less. You have QE done because the economy's just buzzing away and unemployment's down and economic indicators are everywhere. So, I guess trade in your Starbucks for a margarita, right, and just go out there and celebrate. There are actually some guys actually doing that, and then there are some that are just a little upset and not performing or fighting the rally or doing things that are counterproductive. I won't say it's been easy, but I will say that there's been lots of signs to try and be long, try and pick vehicles, and look to own particular names that are trending. There hasn't been a hell of a lot of them that are doing that, but there are some. And if you're looking for shorts and you're looking for pressing vehicles, there's been that too. There's been both sides of the tape. But what you couldn't do is just fight the indices and the sectors and just short every time without a plan, because you've probably been run over. And if you follow people on Twitter that all they do is rant or have a bearish thesis and don't trade for a living, chances are you're probably frustrated on the wrong side of the tape the majority of the time. Sometimes, there's some good calls out there, but things have been very, very noisy. And it's very hard in a noisy environment to be all, serendipity on the beach and, clear-headed and just look at the technicals. But, sometimes you have to do that. But, what you have to do is, stick to your plan, because a lot of people who've been revenging trades have not only lost money, they're blowing up their accounts, and they may not even be in the business anymore. As far as, let's take a look at the SPX, this was that decline. Okay, remember what we said? In order to get down 10% off the highs, there are some things that have to take place. One is, first you have to break and stay below the 8 and 21 day. That happened after a false breakout. Then the next situation was breaking the 50-day. Then coming back, retesting and closing below it. Then we closed below the 150-day, and then what were we going to do around the 200-day? We sliced right through it. So this downtrend or decline was pretty calculated, and some guys could have made a lot of money short, or some maybe did some red dog reversals, like right here for a quick little trade, or maybe right here for a quick trade, or just got out of the way when things broke down. And then you had your low, right? You had your capitulation low right there. You had your higher low the day that everyone declared a bear market in some terms. And then from here, all you needed to do, or what you had to do, is think about what kind of rally are we going to have. Are we going to cross this lower pivot and maybe think of being a little bit more opportunistic to the long side? And then what type of rally can we have? Would we reclaim the 200-day? Would we be able to take back bigger resistance around 1920? And then what do we do over there? So PS, this is what took place. It was fast, it was furious. Just as quick as we came down, we came up just as fast. Here is when we reclaimed the lower area. That's when we took back the 200-day. Here is when, if you thought we had a feeble rally, you had to think again. And then, even lately, when everyone's been saying we have to pull in, we never even came below support 1. Each day I talk about support 1, support 2, support 3, and every day support 1's been holding. So there's really no clues to be super duper, short on the brain. As far as the Qs, let's see where you are. Oh, look at that. The Qs are hovering. Did the Qs, even with the weakness in some high beta names, did it break this upper level? It wasn't even at lower levels, okay, which we talked about that could happen. Okay, stayed right there. And now you're hovering at year-to-date highs. The bios, what are you doing? Oh, looky, a new high on the year. Okay, new high that was the first one to do so right here. So playing by rules, and that's what technicians have, is rules. This held above the 200-day, then wound up breaking through the highs. And then look at this, it pulled back to the 8-day, and instead of breaking lower and hitting the 21-day and retesting here, it flagged and went again. So if you just look at the action, which is hard to do sometimes, the action's been pent up, it's been fast, it's been furious, and there have been some times, some moments that I myself have tried to be cute on the short side, and then I was like, I'm wrong, and let me figure out how I can get long, which has been hard to do. at times, because you don't want to feel like you're chasing things. And everyone out there have been talking about, oh, don't chase this rally. But the same people who said that at 1890, 1930, 1970, and even today still think they're right and we're 140 handles higher, but whatever. But it doesn't matter what other people do, what other people think. They don't pay your bills. You pay your own bills and you have your own process. And we have to continue to continue. Did I say continue? I said continue. Oh, this is only Starbucks. To work on it. So as far as stocks are concerned, we've gone through a lot of different earnings, and a lot of names aren't making new 52-week highs and breaking out, so that trade hasn't been there. There's been some gap fill type trades. There's been some shorts. There's been some stronger names that have actually worked their way through the realm. So just go through a few charts. Apple, I do not own right now. But that was one of the swing longs. That was one of the tweet of 101.50. I like it here. Going to ride it. Rode it pretty much all last week and a half until yesterday. Came in long today. Got out of it when it broke. This actually made a little bit of money short, believe it or not. I didn't want to tweet about it, but anyway, I am flat Apple. We'll see if it consolidates and then perhaps goes again. Facebook did not take that into earnings, which I don't do. But as far as now, what do you do at Facebook? I guess it held this trend, right? You draw a trend line. I talked about it today. It almost got there, held the 100-day again, tailed off it. Maybe there's a bounce. Okay, not every trade is going to be, a breakout trade into new highs. But this one held the longer-term trend line. And we've seen corrective phases, and then boom, corrective phase, boom. So maybe, if you position today versus the low, with time, it'll repair itself. Same thing goes with Twitter. Twitter's been a bit broken, but you did say a tail. It held into the gap, tried to close a little green. There was a move today, at least for cash flow, versus that low, and there was some relative strength. So we'll see what's next here. It's going to take time to rebuild, but it is what it is there. Google, the problem is a lot of these names are just really not set up the way we like them, and I guess that happens at times. Google came out with earnings, hit the low there and trying to flag, and it's been kind of just, this is messy. I know why people are frustrated because these stocks and these patterns are messy. Today, Baidu, that was clean. Okay, that's a clean chart. That's a good-looking chart. It opened up down, went green, and then powered through highs here. That was, I know Sperling caught it quick. For me, my friggin' computer was down at 930 to 937, so I missed it. But here was a strong stock. So if that happens in Baidu, you got to think to yourself, maybe some other Chinese names are strong. So what I do today, is because I know earnings are on Tuesday, and it's building a nice flag, I bought a call spread for earnings because I'm not going to take it into earnings, and who knows their first report, how it's going to be perceived. So I figured just in case it does it on earnings, because my call was 120 plus, at some point in the next 3 to 6 months, I might take one earnings or two earnings, who knows. But this was also another nice swing trade. So for this week, I held BABA and Apple, and that helped my P&L a lot besides just trying to short things, and it was on the virtual trade floor green. Now here you are, nice little flag here, going sideways is good. Okay, I don't know if it's going to be able to break above this 100 before the earnings are on Tuesday. So I said, okay, I'll buy the hundreds. I think I paid $3.20, and I sold the 105s for about $1.70, so I paid $1.50. I know if it goes nuts, I limit my upside, but the premiums are pretty high, so I think I paid $1.50, and if it goes to 103, which it could do, right from here, from 96 and change to 100 and change, the measured move of just this would be something like 103 to 105. It's a double, and if it goes to 105, then you're doing real well. I'm hoping that it's tradable because we'll make a lot more money trading it through here versus the option put on just to take away event risk. But all in all, this has been this is a nice looking chart, and it's been a really nice swing trade, and we'll see what happens once they do their earnings. Other new issues that we've been talking about that people have been having success with are WLK. Although it hasn't taken off yet, it looks pretty good. This was day one. It woke up, tried to go this day, couldn't, and now looks good again. Keep this on the radar. Keep trading it. CYBR is giving you multiple opportunities. It's definitely, you have to take your trade at times, and it's a little whippy, but, I remember this day and a half trade we caught, which was nice. And if you got out when it did a push through failure here, gave you another mini red dog reversal right around this pivot, and then tried to break out today before tailing. But it's active. You could trade this on 3 and 5 minute charts. It looks decent. Loco, no power yet, but it too is coming up, getting a little bit more interesting, up into the upper end of this little area. This is when, if you put it on as a swing at 35.50, you really never violated it. I traded out of it, but I would be looking at this thing again. Gets above 38, could be real interesting. I guess it might need next quarter's earnings to really power it, so we'll see where we are as we get closer to that, or hopefully it gives us a trade before so we don't have to hold through that event. What's going on in the energy sector? XLE, very sloppy. Remember that bottom that we were looking at? Well, that happened here. And if you just put the trade on or put it on versus, when it made a higher low here, and just letting it work out, it's working out pretty well. If you're trying to trade it, you have to be pretty perfect. It's still a laggard group, but it's looking decent. OAHs, I guess, similar pattern. If you got involved with a swing trade at the red dog reversal price, gave you a quick move up, and now it's still just like the other one, building a mid-level flag. Maybe at some point it goes again, but this too is a bit of a laggard. Solar names aren't really doing much. FSLR, mid-level area. Solar City is interesting. I really don't have a lot of success with this, and today it was really strong, okay? And I know I had it long on this day, okay, thinking that it was really strong, and the next day I lost money in it and I didn't have the patience to stay with it, so I got back involved today. And it's trading as if, it could see higher prices, perhaps see, the 200-day, it's poking its head above this. I know a lot of big price targets were out then, and we've seen some decent news. Who knows? I'm in it. It closed well. Let's hope that it gets a little follow through and gets 2 days in a row. We haven't had 2 days in a row in this stock in a long time. I guess it happened right here when nobody was looking for it, but now you see some commitment there. We'll see what goes on. Tesla, this is what got my goat today, or got my goat. What a weird phrase that is. Tough stock. This stock broke this upper area, if you remember, way back then. Okay, and that's when you had that upper tier here. You had this breakout failure where high beta got hit, so that gave you one signal to get out of the way. Then you had that whole new car introduction where you had a gap down and wound up holding the 200-day. Let's see this trend from here. I guess it's fair to say the long-term trend is still intact, and it's been a lot of trades along the way. But anyway, you look at it right here, okay? Even though I messed it up today, it's still showing some commitment to the middle of this range of this bar. And if you take it from where it closed on the 200-day, it's still looking okay. So I guess wait to see if there's volume, if there's a trade to be had here. Perhaps trade one is above 241.50, and then the next would be if it clears this resistance and goes into the gap. I know for me, it just goes to show you the fine line. Like my computer went down at 9:30, and I had some longs and I had some shorts, and I wanted to go after Tesla because I figured it was upgraded today. Down yesterday, held a third, it was down $2, and then my computer went down. By the time it went back up, it was up 50 cents. I'm like, that was a nice little trade it took away from me, and then I got overfilled right around 240.50 with more shares than I'm used to for that stock, and then it dropped $2, and by 9:43 I was pissed. My day was already in shambles, and I traded my way out of it, and lost half of what I was down, and then the rest of the day just turned into I was a little upset. I made my way back from the lows, but I did not make money today after closing at the highs of my year yesterday. Whatever. It happens, but it could have been a disaster, or I could have just held it and it would have been just fine. But again, that's the trials and tribulations of trading. So we'll see what happens. I don't have Tesla overnight, and keep that on the radar. There could be another trade there in the next few sessions, and I don't think earnings are until at some point next week, a little late. LinkedIn came out with earnings after the close, and it was funny because I did say, everyone's writing off all social media. I bet you, this one will be okay. And at first glance, it looked like they missed. I was sitting next to Ian next to me, who's supposed to be the desk analyst, Mr. Smarty Pants. And anyway, when it was at 190, I'm like, I think they rally this. And then we had a staff meeting, and I just left, and I came back, and it's at 205. And another one of those instincts that I didn't follow that would have been great. But at this point, we'll see what happens tomorrow. Same thing. Remember yesterday's recap? I'm like, I think Russia rallies. Well, Russia rallied a little bit. At one point, it was up 4.4%. Still really nowhere, but if you're trading long Russia and you want to be long versus gap, that makes sense. A lot of them, it happens overnight, but whatever. It's a start if you want to be in Russia. We've also mentioned so many friggin' times, gold. Gold's been in a multiple month downtrend, a year downtrend, and recently it gave you a little bit of a rally and then failed and went below 119, and now you look at gold and it seems like it's on a macro basis, it's ready to make another discount. You go to the weekly chart, and I chart gold all the time because I think that's what started my career, if any of you remember. Right around here, I said gold could go to 1,500 an ounce when nobody really thought that, and I said it to Mark Haynes and Aaron, and look at that nice move. And then when gold broke this trend line, I also said I think gold is in trouble, and you could have got out of the way right there at $1,600 an ounce. And then I remember last year one of my biggest trades was being short when it broke this 148, because look at that macro support. Okay, now we're almost at the same kind of juncture as it was here when it broke this 150. It's now toying with this, just say 114-ish, and at some point I do think it could break below this, and you could see it move down to 105. Why not? You have another downtrend here. It's below the 200-day. You had a series of lower highs and then another lower high right here. And although it might hang here for a day, maybe go out a month and buy the 114 puts, and you probably can make $10 at some point. But technically, there's been a lot to dislike about gold, a lot of places to exit some longs if you rode this rally, and even spots to get short. And I think some guys have been making money short. If that's you, congratulations. I guess you also had another little wedge pattern right here. I remember right around this 125, broke to the downside and then held support there. Usually you have a double bottom, rarely a triple bottom, and I've never really heard of a quadruple bottom, so the chances are this does break to the downside. Then you also have the GDX, which is already at lows, and gross, below the 200-day, below all the moving averages, and that's where it is. So, my thesis usually is, if when the market's rallying, being portfolio approach and ride stocks that are above their 8 and 21 day, and there aren't that many of them, but when they're below them, you don't need the risk. You don't need to be involved. You could play them for red dog reversals. You could play them when the market's under pressure. If you sold the 8 and 21 day, you could always try the 100-day, the 200-day. That's the beauty of selling upper levels. But when market's in kind of rally mode and you want to have some risk on, just take the strongest ones. And a lot of them have been like the BIOS, but they're also very extended too. Celgene, well above the 8 and 21 day. Wow, look at that now. Geez, another move. So that could have been a good candidate if you could have bio risk. Guild also well above the 8 and 21 day, very strong. If you've been riding it with the 8 day, congrats to you. I haven't really been riding the bios because of my risk averse nature, but at least this is giving you clues that there's appetite for risk. If there was no appetite for risk, the bios would not be doing so darn good. Apple, I did ride because, something that I'm very comfortable with. It's been above the 8 and 21 day, except for right now it's a little extended from it, so I'd love to see it come back before I get back in there with the meaty version. What else is above? There's not that many things above. That's what makes it hard. Some of the banks, are they back above it? Yeah, the banks are back above it, so I am in Bank of America. Looks okay. Morgan Stanley, back above it. I am in that too, okay, and it's actually been riding that for this while, for a little bit. It's just not showing power like a Goldman Sachs that actually is getting close to highs. I would think if Goldman Sachs makes new highs on year, it'll give a little bit of lift to some of the other banks also, above the 8 and 21 day. And at this particular point, it's been a fast and furious market, and fast and furious markets have a lot of people upset. People who got involved well and sold their longs early, okay, and then haven't been that involved because they don't want to chase. And then you have people who feel like they have this short trade that needs to pay them because they were short 40 handles ago, and if they the day that they abandon it, we're gonna have the down day, and they're gonna feel like they I guess with the last guys who covered. I don't know, that whole thesis. A trade doesn't owe you anything, and you don't owe yourself anything with that. Every day is new. Try and take some of your thoughts out of there's so many psychological things that happen to people in their trading day and their trading careers. You might want to try a breakout a day or two before it happens, and then you lose a little money, and then the day it happens, like, oh, why didn't I do it again? And 2 days ago is when I wanted it to happen, but it doesn't remember the day it happens. Same thing goes for breakdowns. Same thing goes for if you were, if you were short at one level and then it's finally ready for a short a lot higher, and you're like, oh, well, I shorted it down there and it got me. You know what? It wasn't ready down there. Now's your time. Same way, on the long side. Sometimes you could be, I own this here, and you didn't hold it, and now it's another setup, and doesn't mean you can't buy it higher. You could buy high and sell higher. There's just a lot of things, and I'm just kind of babbling right now. It's Thursday. Tomorrow's Halloween. Halloween is a good holiday. Back in the day, it used to be a lot of fun because, people wear cute costumes. And back in college and back in, NYC nightlife, it used to be fun going out for Halloween. So if you're going out for Halloween tonight for your Thursday or for Friday, have a lot of fun. For me, I'm going to go trick-or-treating with my wife, my son, and my dog, and that's going to be fun too. And then there's also a house party that they got a keg, and we'll be playing beer pong. So a different type of fun, but still all relative. So have fun with the holiday. Continue to just, look into what you're doing wrong and take accountability for your own trades. I know there's a lot of noise out there, and I feel like I've actually said it a few times too. I feel like I didn't do some trades because I have, these two friggin' devils in my ear yelling every time the market goes down. They're like yelling at me like, oh, look, I'm right and you're wrong, and who the hell's right and wrong? It doesn't matter. That doesn't pay bills. What pays bills is consistency, a system, a process, and discipline on when you're right or when you're wrong, holding a winner longer and cutting off a loser when you know it's not the right thing. And all these things take time. And I probably have run out of time. This has been too long, and if you've been here the whole entire time, you deserve a beverage. Have a great night, and tomorrow is the relaxed morning call with someone else, but I will be trading out of Short Hills on the chat room, and I'll have an abbreviated note. Have a good one.